Timothy from FS Securities. We are an education and information firm on the Gold Coast in Queensland, Australia. And every Monday morning I go through what happened in financial markets around the world and try to forecast what we may see these coming days and weeks. I'll show you how investors and traders can make money on our stock market. And I'll also show you what is hot and what is not, and what you should hold and what you should fold. So enjoy the presentation and give us some feedback if you wish. Anyway, so review it, rate it and share it. Well, over the weekend we could see that the market in America was actually down. You can see across the three indices, and that really you can see that the previous 2 days, with the exception of the Dow, one day down, one day up, and then one day down. However, for the other indices, the S&P 500, which is the broader index, and the Nasdaq, going from 10,501, I believe that is actually the all-time high, and finish at 10,363, also a very high level in considering that it actually was hammered sometime early this year because of the coronavirus. In Europe, the Stoxx 50 index, which comprises most major European markets, was down nearly 2%. In London, the FTSE 100 index was down 1.5%, and the DAX in Germany down 2%. The Nikkei in Japan was down 0.6%, and in China, the Shanghai index was down 4%, wiping out the profit the previous 2 days. On our market on Friday, we were down 70 points, that is 1.2%, adding on to the 0.5% drop the day before, and wiping out the gain 3 trading days ago. And the futures this morning are indicating that, if that is correct, that the market most likely will open down 27 points at the start of trading. Gold had a good week. You can see it finished almost 1900, very close to all-time high. The all-time high was in September 2011, 1923, that is US. But remember that back then the Australian dollar was actually over $1 US, and now the Australian dollar is, as you can see from here, 71 US cents. Silver also had a good week, less than 20 and finished very close to 23. Brent oil steady over the last 3 weeks, and West Texas crude oil about nearly 80 cents higher than 3 weeks ago. Soybeans slightly up, and the Australian dollar, 71 US cents, was about 70 cents about 3 weeks ago. And by the way, iron ore, important for BHP, Rio and Fortescue, was actually down 0.7% on Saturday, still very close to 110 US per ton. That is actually extremely high considering where it was the previous 12 months. Bitcoin, for those people who trade Bitcoins, Bitcoin this morning was trading at 9,890 US. That is actually nearly $300 US higher than what we've seen it on Saturday morning. And that converts to approximately nearly 14,000 Australian dollars, up 395 Australian dollars compared to where it was on Saturday morning. Now, we also like to actually put in context what happened to the American market, the commodities, and also the foreign exchange. And we like to actually look at 1 week change, and then we combine the 2 weeks together and see what was the change over 2 weeks. So for instance, the Dow was down nearly 0.8% last week. However, when you put the 2 weeks together, we are still in a very strong bullish terrain, nearly 1.5% over 2 weeks. So you can see, even though the drop was last week, the week before was more than 2% higher. The Nasdaq, however, on the other hand, was down last week and was down the week before. over the 2 weeks. So we can see that money that went into the Nasdaq and continued to go higher and higher, it was actually the star performer because of the IT technology sectors. Well, we've seen now money is taken out of the market and profit is actually being materialized by closing some of the positions. The 500 index, that is the broader index, was still higher over 2 weeks despite the loss last week. The Australian dollar continues to go high, as you can see, 1.6% up now last week, and over 2 weeks was actually up 2.3%. In terms of commodities, look, gold nearly $100 up, 5.5% higher over 2 weeks. Silver 20% higher over 2 weeks. It is actually the commodity to trade right now. Have we seen the end of it? No, I believe because of inflation, because of the concern between the spat between America and China, there is a lot of danger and risk in them. And by the way, remember there are a lot of aircraft carriers in the South China Sea. Any mistakes can actually flare up. So there is a lot of concern here. All right, if you are interested to trade any of these commodities, all you have to do is talk to us. In terms of the charts, that's where we get our mechanical indicators, where we put them together for the monthly and the weekly for the investor, and the weekly and the trader, and the weekly and the daily for the trader, and of course the daily and the hourly for the very aggressive trader. We get 5 out of 8 indicators on each time frame, and both time frames have to confirm whether it's actually bullish, bearish, or neutral. As an example, these red dots represents the parabolic stop and reverse, one of the many indicators we look at. They happen to be below the candles. These are the candles. Green candles mean it open low, finish high. A red candle means open high and close below. So the parabolic stop and reverse below the candle, that's bullish. You can see the stochastic was actually up here and then crossed the 80% line and is still below it and touching the red. So I would say that's probably more neutral. If the blue line goes below the red in this area here, we're going to be bearish, counting the number of indicators. The non-week, that's the orange dotted line, is actually above the black dotted line, which represents the 21-week moving average. 9 above the 21, that's bullish. The candles happen to be in this area here between the upper band of the Bollinger Band and the lower band. That's also bullish. That's only a few of the many indicators we look at. When you come to the daily, we see that the stochastic definitely bearish, well below the line, below the red line, that's bearish. The parabolic stop and reverse, bullish. The non-day, the orange above the black line, that's bullish. That's 21-day moving average, that's bullish. However, you can see the candles, you can see lower high and lower low. When you compare the two charts, that's bearish. So I would say, looking at all of these, for the long term, we could be neutral for the traders or some of the traders, whether you are aggressive or very aggressive or just conservative trader. It looks like we're still in the bullish terrain. Remember, we are also very strongly bullish because if you look at that 200-day moving average, and we can see that the candles happen to be above the 200-day moving average. When it dropped many weeks ago, below it, we knew that we were for the long term meaning maybe several months, we were actually below the 200-day moving average, bearish. But now that we crossed above it, we are in that bullish terrain for the very long term. Okay, so and by the way, for the investor, where we look for the monthly and the weekly, the monthly takes a long time to change because we can only look at the candle on the monthly chart at the end of the month. And we have to wait one full month, maybe several months, before the indicators start to form with the indication that is clear. So we could end up being neutral for the investor and could be bullish for the traders or some of the traders. Now, looking at our market, we actually had a retracement from the very highest point at 7,200 all the way down sometime early in the year, where the market dropped suddenly over several weeks, 1, 2, 3, 4 weeks. It dropped quite a bit and got to 4,427 or close enough to it, and bounced back, went above the 38.2 Fibonacci retracement, tested the 50% Gann retracement, and then tested for once the 61.8 retracement, the Fibonacci. It couldn't really do it, but we are very close to that point now. So maybe sometime this week we might see the weekly getting above the 61.8, which means that we could be up for a much higher level. Looking at the daily, and by the way, for the traders, we need to have the 5 indicators here, and we can see the stochastic bullish, the parabolic stop and reverse bullish, the 9-week slightly touching the 9, that's neutral, touching the 21-week moving average, that's neutral. So on the daily, we have parabolic stop and reverse bullish, stochastic bearish. These candles, lower high, lower low, that's very much a bearish candle. However, we still have the 9-day above the 21-day, that's bullish, and we're still below the 200-day moving average. So we don't have very strong confirmation for some of the very aggressive traders to go very strongly bullish. So I think it's time to be conservative trading the Australian market as a whole. But of course, during that particular period, we still have some stocks that are very predominantly bullish and some stocks that are very predominantly bearish. Okay, and that's the mechanical system that we've got. And again, for the weekly, we still look for the investor. We look at the monthly and the weekly, and we can see here neutral for the Dow, neutral for the conservative trader. And by the way, the week before, that's 2 Saturdays ago, we were bullish for the conservative trader, and during the week, obviously we started to go down. On Friday, we started to go neutral for the conservative trader. And for the Nasdaq, we started to see some sign of weakness 2 weeks ago, and then we continued to confirm that weakness last week. At the end of last week, we've got now a neutral for the aggressive trader, very aggressive and conservative. However, for the long term, and because as I mentioned, the indicators don't change so quickly, we're still bullish. So you still have to be very careful. If you are an investor and you put the money in the market and wait for maybe 6 months or so, or several months, then obviously this is maybe for you. But if you are trading in and out of the market, this is probably more appropriate for you. And again, you need to understand whether you are a conservative trader or very aggressive trader. And if you want to learn about what's happening, obviously you need to talk to us. Now the S&P 500, again, it's been very strongly bullish 2 weeks ago, and we started to see some signs of weakness for the conservative trader. Gold, we continue to be very strongly bullish. However, at the beginning of last week, on Monday morning, we could see bullish for the investor and neutral for the traders. But very quickly during the week, starting maybe Tuesday or Wednesday, we turned very strongly bullish here. That's Thursday morning, and that's Friday morning. All right, so we are strongly bullish on gold and silver. Silver has been very strongly bullish for a long time. And as I mentioned, silver last week or the last 2 weeks was up by nearly 20%. Bearish, the American market versus the American dollar versus Japanese yen, very bearish. We are strongly bullish on the Australian dollar and bullish euro versus the US. In terms of our sectors, this is what we see on Saturday morning, with the exception of telecommunication. For the very aggressive trader, we are bearish. For the rest of the market, we are bullish with the exception of energy. But however, for energy, we've gone from bearish to neutral. So we just have to wait a few more days to actually confirm that particular projections or forecasts. And this is the daily. That's what we see this morning. The all ordinary, bullish for the very aggressive and aggressive traders. Neutral for the conservative trader. Consumer discretionary, strongly bullish. Gold, strongly bullish. Materials, BHP, Rio and Fortescue, bullish for the very aggressive trader. And telecommunication and telecom in general is bearish for the very aggressive trader. Okay, now for the stocks, we can see here, that's the daily. What we have this morning, the XJR bullish, BHP bullish with the exception of the conservative trader. So you're in and out of the market on a daily basis. You are bullish for BHP. However, today the market may open lower, so maybe at the end of the day or very close to the end of the day, you may want to see the charts and see how BHP is doing, and you may enter a bullish new position or add on to the current position that you have. Rio, very same situation for Rio as BHP. Newcrest Mines, you can trade it on the bullish side if you already have Newcrest Mines because you were bullish several days ago. Hold on to gold. QBE also has been performing well, and TPG, they've changed the name from TPM to TPG now, bearish, and so is telecommunication. And you can see here what happened on Friday and the day before, and put them together to be able to get some common sense approach to it. So I mean, you can see the XJO was down 1.2%, the day before was up 0.3%, so that is actually between 2 days we are negative. However, you look at CIMIC, the old Leighton Holdings, we have 2.3% up, 1.7% down, and CIMIC is going from very strongly bearish 3 days ago to neutral, and we are still bearish for the investor, the long-term investor. NAB, again you can see up 0.7%, down 1.4%, turning bearish on this morning. Newcrest Mine, of course, strongly bullish. QBE bullish. TPG, we were actually, that's interesting, down 2.4%, up 4.7%, and we're still bearish here. Again, you've got to really understand that nothing really works 100% of the time, and you've got to be choosy and you've got to do the testing yourself. We like to look at volume and compare the volume up and down to what happened during the day, each day. On Friday, 35% of all the stocks that were traded declined and 26% advanced, and the volume dropped. Well, that's really encouraging. When the market is down and the volume is down, that's a really good, positive approach. We worry when the market is down and the volume is up. Like, for instance, on Wednesday, the market was down and the volume was higher. But then the following day, the market was up and the volume was higher. So again, you've got to really look at each day, and this is actually an approach that is valuable for the very aggressive trader who trades in and out of the market on a daily basis. If you look at the last 5 days together, compared all the advances and all the declines, the last 5 days, we can see that the advances exceeded the declines. But that wasn't the case the previous 5-day periods. That's 15 days ago, 10 days ago, last 5 days. Again, we like to compare and try to understand what's happening in the market. Now, these are the most active stocks, as you can see here. We have Independence Group was up 5%. We need to have a look at this company, but it didn't appear anywhere the day before. So could there be an announcement? Could there be something happen to that particular stock? We need to investigate it. It had 5.4 million shares. We want to compare that with the average volume, so we'll have to look at that. QBE, it's painted yellow because we have 2 days in a row. QBE was 4% on Thursday at the end of the day, and then QBE, even though the market on Friday was down, QBE was up 1.7%. That's extremely positive. Horizons was up nearly 0.9%, and Horizons, if I can find it, right, there we are. Horizon was up 1.1% the day before. It's not painted yellow here because when you compare this day with the day before, then obviously it's not yellow. That's only the first time it appears, and then the second day in a row it appears. So all those 2 companies, we need to have a look at them today, and if there was something valuable, we are going to put it on the website under our picks. Okay, now the next chart. These are the 52-week highs, companies that have actually gained that particular title. It reached the last 52-week highest level. Metals Tech, Dots Dana, the one painted in blue are the ones above 10 cents. All the others happen to be penny dreadful. We're not concerned about them. So we may have to look at some of those companies for the very aggressive trader and see. That was the 52 weeks the week before, and then we try to find if these companies continue to reach a new all-time high the last 52 weeks. Again, you have to take your time and compare this level with this level, and again you need to actually compare the one painted in blue because they are the ones above 10 cents. I don't have the time in this presentation to go through this whole thing, but remember that it is important that you can go into the website and you have more time to study all these movements. Okay, next one, all the downsides. If you're interested to go short, provided your CFD or the option platform allows you to trade leverage, because you don't want to trade these. They are small companies, or maybe actually look at this here, but the volume is not very high, 745,000, but the price was down 32 cents, nearly 5%. Gold Mountain, 21% drop, but then it's only less than 10 cents. And then compare these drops 2 weeks ago with these levels here. So if there is continuation, then obviously there is something more than 1 day movement. Okay, now announcement today, looking at Australia, that's tomorrow. Nothing today actually, I can't see anything. And in America tonight, we've got core durable goods orders, 3.5% expected. If it's higher, that's good news. If it's lower, bad news. Double goods orders, 7%, big drop from the previous week, previous period, the previous month. So again, we'll have to look at that. And tomorrow on the Australian market, we've got the RBA Assistant Governor Kent speaks, and composite HP index, whatever that is. Okay, now if you look at what happened previously last week and results, on Friday, let's have a look at the US bank stress test results. We haven't got any news about that. The US price index expected 0, was better than expected, that's why it's green. Personal spending was down from expectation, but much higher than the previous period, which is good news. Income, they expected the income to be lower than 6%, was only down 4.2%, still lower than the previous period, previous month, but it's better than expected. And then on Saturday morning, consumer sentiment, it was 79.1. They have certain criteria, it came lower. Okay, we like to look at volume. We start with the 50-week average volume, the moving average over 50 weeks. When nothing in the top 50 stocks, we couldn't see anything here. Over 50 weeks, we couldn't see anything that extremely higher in volume. However, when you look at the mid cap, we go down in terms of excess volume. So for instance, this company Infigen, the price was up 2.2% over the week, and look at the volume. The average weekly volume is 11.5 million transactions, where last week we've seen 40.2 million. So there is excess volume here, and over the week the price went up by 2.2%. So you need to go and see the daily movement. At the end of the week it finished at 2.2%, but then it's possible that earlier in the week it was actually up 10% and then finished with 2.2% up. So you need to compare that with the daily as well. And you've got several companies here. This company here, Aurelia, 12.7% higher in the price, from 55 cents to 62 cents. And the volume was more than double, from 24.7 million to 62.4 million transactions. And again, all of these companies, if you like, you can actually talk to us. You may want to talk to us, and then we can open that particular slide for you while we're talking to you over the phone and try to see what stock you like, and we can discuss the various outcome. On the downside, we've got this company Foslock. I'm not sure what is that company do, but it was down 7%, and the volume was up 25% above its weekly average volume. Now when you look at the daily now, sorry, that's the week before, the daily, QBE on Friday had 1.7% price increase, was slightly higher above the average volume. Insurance Australia was down nearly 8%, and the volume, look at the volume, was nearly more than double, from 6.4 million to 20.7 million. So maybe you want to look at IAG to see whether it's worthwhile shorting IAG today. On the downside, Jupiter Mine, Galaxy Resources, Unity Group, all of these companies have actually had excess volume and excess price, although Galaxy was only up by nearly 1% on Friday. On the downside, you got GUG Holding, down 1%, 24% higher in volume. Okay, finally the disclaimer. Everything we said here is only for general advice only. Remember that there is risk in the market, and you need to understand your risk appetite. So before you enter any particular trade, consult with us or consult with the professional advisor if you're not a client of ours. And remember, you need to understand your own risk appetite, and you need to know how much can you afford to lose before you enter a trade. If you have any questions, all you have to do is ask. And how to ask? Well, of course, these are our contact details. George at FS Securities. FS stands for full service. FS Securities. You got two S's here. George at fssecurities.com.au. You can send me an email. This is our website. www.fssecurities.com, or you can send me a text. If you text me or you call me from overseas, 61 is the country code. You don't need the 0. 61-411-259526. If you are local anywhere in Australia, you text me or you call me on my mobile phone, 0411-259526. And finally, trade well, enjoy trading, and hopefully you make some money this week.